Hello, in this video, I will review the signals provided by Sunshine AI Signals for the week of May 28th to May 31st and show how they can be used to trade the ES500 or the MES500 future contracts. You can also trade using options or ETFs. For those of you who have not viewed the introduction video, I strongly encourage you to do so. You can find it at our YouTube channel, the introduction video. As a brief review, Sunshine Signals provides 3 signals daily: main signal, short-term signal, and the weekly signal. Each one will show a buy, range, or sell. In addition, Sunshine Signals will provide support, resistance, and a pivot point which acts as a bull-bear line for the day. Sometimes an EOD sequence will appear, but not always. And if the signal detects a trending day possibility, it will show here as unilateral. Here it's showing that it's not unilateral, so it is not a trending day. However, finally, Sunshine Signal will provide a reference chart, which is a possible movement of the market for the day. However, it's important to note that the chart is simply to serve as a reference. It is not intended to depict the exact movement of the day. Before we take a look at this week's activities, it's helpful to zoom out and take a look at the larger trend. This is the ES daily chart from the beginning of 2024. As you can see, the market has been in a clear uptrend, but from mid-March until about mid-April, the market fluctuated between 5160 area to 5300. In mid-April, the market broke out of this channel and fell through, but found support in this area. And then in the beginning of May, the market recaptured this zone and the market trended back up towards the top of the channel. In last week's video, we had said that we expected the market to either hold this middle zone and move back up to test the upper end of the zone, or if it gets rejected here, it will move back down to test the bottom of the channel. So the market indeed through last week moved up and consolidated in the upper half of the zone. For this upcoming week, we wanted again to see if the market can break through this zone and above this 5350 area. And then if it does, it could start the next leg up. If it gets rejected from the top of the zone, then again, we would expect a movement down to test the middle of the zone. And if that fails, then the bottom of the zone. For Tuesday, May 28th, Monday was a holiday, so trading week began on Tuesday. The reference chart is suggesting a possible dip, and then if there is a dip, it will be bought back up. Pre-market signal is range, which is a downgrade from last Friday's closing signal. There's no EOD sequence, and trending, it's not showing to be a trending day. Price consolidated in the morning, the market opened, and we had a slight drop, but mostly just consolidated in the morning for most of the morning. And also notice that with the consolidation, the market couldn't really give too much above the pivot point and couldn't even get to the first resistance of 5338. So during one of these bounces, you could have shorted with a stop above the high of day. And if you had done that, it would have given you about 20 to 30 points the other day. And then we have said that the reference chart show that if there is a dip, it could be a long opportunity to be bought back up. So the market did dip down. It did break through the 5322 support, which was our pivot point right here, and we're around where the market consolidated in the mornings. The next supports 52.77, which it did not reach. But we did know that the 5,300 area is a support zone. The 52.90 to 5,300 area is a support zone. And note that 53.03 was a support that was given during the FOMC minutes release on last Wednesday. So the market did not hit that, but that is also a support that was given last week. So this is an area where you could take a long, and if you had, it would have given you about 20 to 25 points on this retrace up. For Wednesday, the 29th, the reference chart is showing a possible range-bound day with a possible dip later on in the day. When you see this range-bound day, the general rule is to avoid the middle and trade the edges. The signal gave a range, and we have supports here with no EOD sequence. I'm sorry, there's a long at EOD sequence, which means if we see a dip towards the end of the day to a key support level, it could be a long opportunity. Market opened around 52.80, which is a prior support level, and close to our support level here. So generally, because the market opened below the pivot point and it actually went through the support, this would generally support shorting bounces. So here, when the market bounced up towards 52.90, I mean, some people might have tried to short here, but if they did, if they had like a 10-point stop loss, if they could weather through this volatility, they still would have made money towards the end of the day. But you could have been stopped out during this. So, and then the next short, we know that the 5,300 level was another resistance level. So, and again, that's close to yesterday's resistance, that's close to yesterday's support at around 5,300. So here, you could have taken a short around the 5,300 level and would have given you about 20 points. And that was probably your best trade for the day. And given this range bound day that we had. But the key thing to note is just that, we at open, you note the 52.80 level, and then it goes up to around 52.96. Avoid trading in the middle. Avoid trading here because you're just going to get chopped up. Instead, wait for the extremes. So there really wasn't a long opportunity presented to you unless you had taken a long at open. But there were a couple places where you could have shorted and gotten anywhere between 10 to 20 points. For Thursday, GDP data was released at 8:30 a.m. ET. The reference chart here is showing a couple possible long possibilities. But on data days, it's always a good idea to pay more attention to the price action and not rely too much on the reference chart. We had a pre-market signal of sell range sell, which is also provided here, along an EOD sequence with a daily downtrend. The market opened at around the 52.70 level. And the signal quickly gave a 52.72 resistance. So here could be a short opportunity with a couple points above the high of day, and targeting some of the supports here. So we have a support coming here at 52.60, which you went through, and then at this point, I mean, your trade should really be set at least break even, if not a couple points down. So you're able to capture some gains if the prices go back up. So here you could have captured between 10 to 15 points, or if you set a stop loss at the very least, you should not have taken a loss on this trade if you had shorted around here. And then the market went back up, and given the long EOD sequence, the expectation is for the market to come down at the end of the day to give us a long opportunity. So when the market came back up to this 52.72 level, this could be the second short opportunity. And this one would have given about 30 points. And here, generally with a long and EOD sequence, you could have tried a long here. I mean, if it, around this level, it's right in between these two supports given in the morning. But the long and EOD sequence was dismissed shortly before closing. So I personally would not have taken a long here. And also with PCE data being released the next day on Friday, May 31st, you know, it seems like a coin toss. So for me, there's not enough risk reward here to be taking a long. So for Friday, PCE data was released at 8:30 a.m. in the morning Eastern time. Overnight, the market didn't really do much, and the movement really came, you know, maybe about at around maybe 8 a.m. Eastern. And, you know, if you look at this volatility, again, this is why it's generally recommended that you size down on event days or avoid trading if you're not comfortable with the volatility. And we have a reference chart here, which shows kind of a down moving day. But again, on event days, it's generally, I generally do not follow the reference chart, and I follow more the price action. And another thing to note is that there was a Lana EOD sequence on Thursday that was dismissed. But if you had taken it, you know, it would have given you probably about 20 points. But again, I think being an event day, it could have went the other way. It could have easily went the other way. So it's fine not to take that trade if you're not comfortable with it. So our signal showed a range sell, which generally supports selling bounces. We have a pivot point here. There's no EOD sequence, and the market is not showing a trending day with a short-term trend, a daily trend of being down. So with that, the market opened at around the 52.70 resistance that we saw from yesterday. So, and at open, it couldn't get above that area, the high, the overnight high. So that could have been a short there. A support did come up towards, you know, in the first hour or so of trading of 52.52, but the prices fell through that pretty quickly. So obviously that would not have been a very good long opportunity. Instead, you go through the market, and the market even fell through the solo support of 52.35. So here it's just if you're looking to go long, it's best just to wait to see where the market bottom. So here the signal gave a support 52.10, and that happens to be where it stops. So whether or not you caught this, I think it just depends on your risk tolerance and your comfort level of whether or not you're willing to take a trade here, because it, you know, if it falls through here, it could also be a long way down. Instead, though, the market did show a pretty strong recovery from 52.10 to 52 to here 52.27 and then 52.35, which was our support level. When the market recaptured 52.35 and it kind of went back and down and showed that the market isn't down, this would have been the second long opportunity for the day with a stop loss below the low of day here. I mean, assuming you're able to take that risk tolerance, you could have taken the long here because of this strong recovery that's showing here, and then the market then once it got through the 52.35, the short company started, you know, Friday afternoon, sometimes that happens, short company started, and it pushed it back up to the 5,300 level. So to summarize, this week, the prices did come down to test the middle of the zone. It even dipped down on Friday, but quickly recovered to close back up in the upper half of the zone. For next week, we'll look to see again the prices can break through this zone and get above the previous high of 53.68. And if so, we could see another leg higher. And given that we've tested this zone multiple times, and there's some consolidation period here even, and then, this area, if it does break through, it could be a pretty significant short covering to really push it up another leg higher. If this area holds again, then again, we're looking for a movement back down to the 52.50 area and then down. And then if that fails, down to the 51.70 zone right down here. So I hope everyone had a good week and have a great weekend. If you do have any questions, feel free to contact us at sunshinesignals@gmail.com.